Future value is a financial concept that assigns a value to an asset based on estimated variables such as future interest rate or cash flows. It may be useful for an investor to know how much their investment may be in 5 years, given an expected rate of return. This concept of taking the investment value today, applying expected growth, and calculating what the investment will be in the future.
Okay, today I will explain about future value and compounding. The first one is future value. Future value is a financial concept that calculates how much a current investment or a series of investment will be worth of a certain date in the future. It assumes that the investment will earn a rate of return over a period. Okay, for compounding part, compounding is a process where the value of an investment increase because the earning on the investment, both capital gains and interest, earned interest has time passed. This effectively causes wealth to grow at an increased rate. In this slide, I will talk about the use of future value in our daily life. There are 5 things I will share, which is the first one are saving and investment. For example, for saving and investment, retirement plan is individuals often use the future value calculation to plan for their retirement. They estimate how much they need to save regularly to meet their financial goal when they are retired. Okay, the second one is education planning. For example, college saving, that is parents may use future value calculation to determine how much they need to save for their children's education. This allows them to plan for tuition costs and other education expenses. Okay, for the third one is loan and debt management. For example, loan repayment, that is borrow, can use future value calculation to understand the total cost of the loan over time. This helps to budgeting and making informal decision about borrowing. Okay, for the fourth one is real estate. The meaning of real estate is we can consider about homeowners. Homeowners can use future value calculation to be used to estimate the appreciation of real estate over time. This is value for individual considering home ownership as a long-term investment. For the fifth one, the last one is insurance planning. Insurance planning that we can say is the example is life insurance. Future value calculation can be used to determine the amount of life insurance coverage needed to ensure the benefits are financially secure in the future. Okay, the list of companies that use future value that we can know. That is the first one is Maybank, that is Malaya Bank Berhad. The second one is CIMB Group. The third one is Petronas, Petroleum Nasional Berhad. The fourth one is Tenaga Nasional Berhad, TNB. That is a company for our electrical. The fifth one is Telekom Malaysia Berhad, TM. And the last one is Genting Berhad.
Now, I will show you example question how to find future value. Question 1. A 1,000 ringgit investment is held for 5 years in a saving account with 10% simple interest paid annually. We can find the answer by using 2 ways, which is by using formula and Excel. Now, I will show you how to find future value by using formula. First, find the hint from the question. RM1000 is represent PV, which is present value. 5 years represent T, and 10% represent R, which is rate. Now, you can insert all the value into the formula and get the answer, which is 1000 times 1 plus 0.10 to the power of 5. And the answer is future value Rm 1610 ringgit 51 cent.
The second way to find future value is by using Excel. Insert the value of rate, which is 0.1, the value for Ampere, which is 5, the value for PMT, which is 0, and the value for PV, which is present value, is 1000. Now you click Formula, next click Financial, and after that click FV, which is future value. For rate, you click B1, which is the value of rate, 0.1 for Ampere. Click the value of Ampere, which is 5. For PMT, click the value of PMT 0 at B3. And for PV, click the value of PV at B4. Lastly, click the right button. Now you find the answer of future value.
Now I will give you the second question of how to find future value. The question is, how much money does Tisha get in 10 years if she put 40,000 ringgit into an investment account and the investment pay 12% annually? Okay, the first step that we have to use to find future value is using formula, which is FV equal to PV in bracket 1 plus R to the power of T. Okay, now we have to find FV, right? So FV is the future value of the investment. So to find the FV, we must collect all the information given in the questions, right? So our PV is equal to 40,000, which is PV is the initial amount of investment. Our R is 12%, which is 0.12, and our T is 10, which is T is the number of years. Okay, from the information given, we have to insert all the information into the formula, which is FV equal to 40,000 in bracket 1 plus 0.12 to the power of 10. And finally, we can get the answer is 124.23k.
Then we can also use Excel to find our future value, which is the first row we must put PV, second row is rate, third row is Ampere, and the last row is FB, which is the answer that we have to find. Our future value from the question is 40,000. Our rate is 0.12, which is 12%. Our Ampere is time, which is 10 years. So now we have to find the answer for FV. So the formula to find FV is equal to FV in bracket, we must put B2, which is our rate, comma, we must put B3, which is our Ampere, comma, we must put 0 because 0 is our payment, but in this question we doesn't have any payment. And last, we must put B1, which is our present value. And then we have to right click, and then we will get the answer.
Next, for the third example, the question is, if Encik Salman purchased a property for 200,000 ringgit and expect its value to appreciate at an annual rate of 4%, what will be the future value of the property after 15 years? Alright, so the first way to solve this question is we can use formula. The formula is FV equal to PV times with bracket 1 plus R to the power of T, where FV is future value, PV is present value, R is the interest rate, T is the number of periods. And then from the question, the informations that we got is PV is equal to 200,000, R equal to 4 over 100, which is 0.04, and T is equal to 15. And then we just plug in the value into the formula and we can calculate it using the calculator. So lastly, we will get the final answer, which is 360,188 ringgit and 70 cents.
Alright, there's another way where we can find the answer, which is using the Microsoft Excel. Firstly, at the first column, we need to put the informations we have, which is rate and per, PMT, PV, and lastly, what we will solve, which is FV. Then the next column, we put the numbers we got from the informations, which is rate is 0.04 and per 15, PMT is 0, PV is 200,000. And then to find the answer, we use the formula equal FV, and then we use the formula that already given, which is we need to click the rate first, comma, and per, which is 15, click 0, PMT, comma, PV, and then we just close bracket and we get the final answer, which is 360,188 and 70 cents.
In conclusion, future value is used for planning purpose to see what an investment, cash flow, or expenses may be in the future. As you can see from the examples, future value can also be used to determine risk, see what a given expenses will grow at, if interest is charged, or be used as a saving target to understand whether enough money will be reserved, given the current pace of saving and expected rate of return. That's all from us. Thank you.